Hi there, welcome to Neppy Invest. Now, my favorite two sort of videos I have been doing quite a bit recently are breaking out stocks and hot stocks. So these are the sort of companies that I actually do actively search to invest or trade in. And I thought it'd be a good idea to do some definitions or what I look for in defining these breaking out or hot stocks. So in this video, I'll be talking about what is a breaking out stock and what I look for. So what do I look out for in a breaking out stock? Now, at the end of every trading day, what I do is a scan of the ASX. So I'm looking for companies whose share price and volume have increased significantly in the trading day. So I did that on the February the 9th and I found one particular stock, and I'll show you that as an example in the next slide. And typically, if the share price has increased on significant volume, there is some sort of catalyst behind it, and typically it is a positive announcement, an earnings upgrade, or maybe drilling results, that sort of thing. Now, there's not always a catalyst, and if there's not a catalyst, the ASX will typically give the company a price query that they have to answer. Now, the story doesn't finish on that trading day. I need some confirmation, some proof that this isn't a pump and dump. And if it is a pump and dump, typically the share price rises quite significantly and then falls back even more significantly. In fact, the share price might go back to the pre-breakout levels. So I need some confirmation on subsequent periods that this share price can be maintained or even start increasing further. So here is an example on February 9 of a company whose share price is potentially breaking out. And that company is really good. So when I did my scan, this is the first company that popped up. Share price had increased 176% in one day. And you can see the volume there. So what I do with the volume is I look at the previous 50 days and just have a moving average there. And then I compare the volume on the trading day in question and compare that to the previous 50 days. And you can see the volume for Reedy Lagoon had increased 2,442% compared to the previous 49 days. So you have to say that's share price increase on significant volume. So someone was really excited about Reedy Lagoon on the 9th of February. So without even looking at anything, I knew there was some sort of positive announcement, or some sort of announcement anyway, that the market thought was positive. And Reedy Lagoon did release an announcement at about 1:30 p.m. in regards to them going into green iron or something. Now, I had a very quick look at the announcement. It's not the sort of announcement I like to buy into, simply because there's a lot of unknowns in regards to it. So I decided just to stay out of Reedy Lagoon at the moment. But the share price, last time I looked at the trading on the 10th of February, had pulled back something like 23%. That's not too bad. Now, you typically will see a bit of a pullback, profit taking, that sort of thing, but we don't want to see the share price of Reedy Lagoon going back to around 20.25 or 2 to 2.5 cents, because that would be a false breakout. Now, speaking of false breakouts, I've got an example here of a company called Stem Cell United. Their ticker code is SCU. They had two false breakouts at the end of last year in October and December. Now, the first false breakout was in October, and that was based off an announcement the company had made in regards to a seed grape project. I didn't look closely at that, but if it is to do with growing grapes in the ocean, I'd be actually more interested in reading that. Anyway, the share price did increase 75% in the one day, but at the end of the closing on that day, the share price was significantly lower than the high on the day. The high on the day was around 3.5 cents. It finished around just over 2.1 cents. So you can see that on that candlestick, a massive tail on the upside. That shows you there was a lot of selling pressure during the day. And then on subsequent days, we saw more selling pressure. So there was a lot of profit taking that came into the market. And then over the subsequent 2 months, the share price just leveled off. So that was sort of a false breakout. It wasn't an absolute false breakout, but the next false breakout was an absolute false breakout. That was in the start of December. Share price rose 28% one day and then 35% the next day. You can see an identical candlestick chart in the previous false breakout with that very long tail to the upside, which shows you there was a lot of selling pressure. They also received an ASX price query because there was no catalyst behind this increase in share price. And once they released that ASX price query to the market, the share price just fell over subsequent days. In fact, over the next 6 days, the share price fell to the pre-breakout levels. Then again, over the next few months, the share price has just remained steady between 1.5 and 2 cents. And then as I speak, looks like there's another potential breakout. Again, no catalyst. And again, the company has received an ASX price query. I haven't looked at it, but there is a chance they've just said, we have no idea why this is happening to our share price. No idea at all. So now I'm going to go look at some historical examples, and I find that looking at the past, you can learn a lot and apply that to your present day trading strategies. So I'm taking you to a company that I do know quite a bit about. I'm quite familiar with Appen. I was a long-term holder of this company for a while there. Recently I sold out, but I am hoping to buy back in a lower price, hopefully. So this is going back to 2015. So just after the IPO'd, the share price was hovering just under $1. Looked like there was starting to be a bit of a positive trend with the share price in late July, early August. But when they released the half-year results at the end of August, something like the 28th of August, they released the results and also upgraded the full-year forecast with those results. Now, I have found over time the most powerful announcement a company can make is upgrading their profits or earnings. And you can see here we have two examples with Appen over a 2-month period where they've done that. In the first instance, the share price increased 10%. Now, after that increase in 10%, the share price just leveled off. So you had 7 to 8 trading days to actually buy into this upgrade in the profits. So you didn't have to rush in. You could have bided your time, that sort of thing. And then the uptrend continued up until December, where they increased their profits again, their forecast profits. And the share price responded with an upgrade or uptick of 15% on that one trading day. Now you can see a bit of a gap there. There are some traders who swear that gaps always fill, and this is a prime example of a gap not filling. So this gap between $1.18 and $1.33 has never filled. And if anyone argues with you that gaps always fill, just go back to Appen. I've done this in the past and show them a chart of this little period, and you've got a prime example of a gap not filling, and the share price just kept on going up. So another example is a company called Objective. Now, this is not a company I've owned. I wish I did buy back in 2012, and you'll see why in a second or so. But anyway, their breakout happened in February 28, 2012. Again, that is reporting season, February, the release of their profits for that half year, and the profits increased 139%, and that seemed to be the catalyst behind share price re-rating over the next few years. You see share price at that point in time was around 30 cents or so, and then 2 years later, or 3 years later, the share price was at $2, and right now I think the share price is $13. So that seemed to be, this announcement seemed to be the catalyst that drove the share price of Objective from 30 cents all the way up to $13, because before this, the share price was not doing much, and then after this, the share price just kept on rising. Now, my final example I've got is Piedmont Lithium. So this is a company that's valued at $1 billion, has no revenue or anything, but there is a lot of positive sentiment, not only behind this company, but behind their industry, their sector. Now, their breakout happened on the 16th of September 2021. There was no catalyst behind it, so I think they might have got a price query from the ASX. The share price increased 20% on the 16th of September, then increased 8% on the 17th, and then 15.4% on the 18th before the company went into a trading halt. So there might have been some loose lips. Maybe some people were talking, and no, because they were in a trading halt for 10 days. And when they came out of the trading halt on the 28th of September, they had signed a sales agreement with Tesla, and the share price increased 83% in the one day. So it was around that time where we did see the breakout in Piedmont Lithium. Share price has subsequently risen to about 75 cents or so, but this was the company making deal, it seems like, for this company. And the breakout happened a few days or a few weeks before the announcement, but again, I think this was a case of there being some loose lips within the market, within the company, that sort of thing. So that's all I've got on what is a breaking out stock, what I look for, that sort of thing. So if you do have any questions, leave them in the comment section. It might take a while for me to answer any comments because I'm falling behind in doing that, just because the amount of comments I'm getting is quite high right now because of the subscriber levels. But anyway, if you do have any questions, leave them in the comment section. Any thoughts, anything, I don't mind hearing. If you disagree with me or any sort of feedback, I will take on willingly. Anyway, that's all for today. Again, I'm not a financial advisor, so if you do need financial advice, make sure you seek out someone who is qualified. That's all for this video. Have a good day. See ya.